Let's get out of just looking at what's happening in the U.S. in gold, and that is the dominant nature of the physical market. Now we had from the far left political arm, politically in their own house, embrace this company and tell people how important it was. So this critical mineral talk that people hear about is real. Governments, because of decades of ignoring it, and it can't happen overnight. People talking about, the United States and Canada, they can pass all the laws and put all the money aside. This isn't just something you go out, you buy it, and you start using it tomorrow. It'll take years to get to that level.
Financial strategist Peter Grandich reveals why the global gold and critical minerals market is entering a powerful new phase. He explains that it's no longer just about what happens in the U.S. Physical demand and geopolitical shifts are reshaping everything. Governments that ignored these essential resources for decades are now racing to rebuild supply chains. But as Grandich notes, this won't happen overnight. Passing laws and setting budgets can't replace years of lost momentum. His insights show why physical gold and critical minerals are becoming vital for long-term stability and investment strategy. If you found this helpful, like, share, and subscribe, and turn on the bell so you never miss future insights.
But even I felt a couple months ago we needed a correction. We were in a parabolic race. We did. We got slightly under 4,000. There was a chance talking about, can go as low as 3,600. And Elijah, as I told you before we started recording, even I'm impressed of how well gold handled a natural needed corrective phase and has resumed its climb again. Listen, we up $100 and something yesterday. Now, granted, when gold was 2,000, that was like a $50 day. We must keep that in mind. But nevertheless, I'm not surprised today, that we opened higher, saw some follow through buying, and of course, some profit taking. But nevertheless, both gold and silver, gold still leading, silver's tagging along, but both of them most impressive on how they've come through this corrective phase. And of course, they're doing this in the face of the still stiff competition. Everybody and their mother, I hope I could say it that way, Elijah, is touting Bitcoin. There isn't two posts where there isn't another Bitcoin prophecy. That they're talking trillions, the president, his kids, every bank's going to have it. There's all sorts of law, and it can't get out of its own way, and it's rolling over, which and this is all happening while gold just remains really, really strong. So I have to tell you, even I'm impressed. I thought the corrective phase could last longer. It still may back and fill here, but I think anybody that was looking for, 500 or 1,000, these people popped out of the woods all of a sudden saying it was over. We're going back down towards 2,000, but just very, very impressive so far on how gold has handled itself. Well, they corrected like just gold did. I wouldn't call it huge. I called it a needed and necessary, but here's the thing to remember now. Another quarter's gone by. They're selling gold. Imagine you're a Canadian gold producer. Gold is around $6,000 Canadian, and the biggest cost may be for a producer up there in the area of 2,000, some are below that. Man, they'll take that profit margin all day, especially when oil prices are going lower, which is one of the biggest expense, and labor costs. So the majors are in excellent shape, but what's been very pleasing for a person that made such huge bets on the junior resource end of the market, they're now stepping down aggressively and doing deals, particularly one where a Mexican major producer who had no interest in Canada up until just a couple of weeks ago, and now went out and made a major purchase of a company in Quebec. So I think A, the majors are going to keep printing money. B, their stocks are going to do quite well. And C, M&A in the metals and mining industry is into its highest gear in years. I should have stated earlier to you, is this also the other bullish reason for gold? Let's get out of just looking at what's happening in the U.S. in gold, and let's look what's happening in the world, particularly where there's growth in the world, predominantly on Asia. They're getting on lines to buy gold. And they're taking their weekends, young Chinese, Asian, Vietnamese, going into stores to buy physical gold, ownership of gold, not just because it's a pretty necklace, but as an investment. And what's happening on our weekends here in the U.S., Elijah? We have people going into stores to buy stuff they really don't need with money they don't have. So that's another bullish factor. And if somebody said to me, what's the single biggest difference in this global market than any others you've been in? And that is the dominant nature of the physical market. The paper hangers, the people who have manipulated, we call it the Crimex, the Comex, whatever you want to call it, out of London, New York, they're at least badly wounded, if not. Now, that doesn't mean like in the old baseball, they bring the old timers back once a year and they get their day to hit a few pitches. But I think the paper market, which we were used to and always saying, okay, it's only a matter of time till they show up, they've been destroyed. And main reason they've been destroyed is because their market has been taken away from them. Gold has moved to the Far East, and the people in the Far East have other desires to use gold other than as a paper hanging place. And that's why I think is another bullish reason why we're not going to have major downturns anytime soon in the gold market. And if that prices comes because of all hardships and somehow you were prevalent enough to be smart enough to own it and whatever, don't hoard it completely. You know, a little less, you'll still be able to go by and the wonders that you see, if I can just close with this, Elijah, the wonders that you see when people get that little extra food that didn't think, their gratefulness, you can't measure that in dollars. And there's just a feeling that you get of joy that nothing else, even seeing gold go up $100 comes close to equaling, to see another human being be happy or be glad about something. And I'm not saying you're godlike, but you're called by, as you and I as Catholic Christians, that's mandatory. That's not an option.
In this exclusive discussion, Peter Grandich shares deep insights on the recent gold correction, the resilience of the market, and the powerful global forces driving its continued climb. He explains how gold handled a natural needed pullback and why both gold and silver remain strong, despite competition from assets like Bitcoin. Grandich highlights the profitability of major mining producers, the rise in mergers and acquisitions, and the growing physical demand for gold across Asia, especially among younger investors. He also contrasts global buying patterns with Western consumer habits and reflects on the shift from paper markets to real physical ownership. His perspective offers a grounded look at why gold's strength is far from over. Let's get into the interview.
Let's look at that. The last great bull market was 2010 and 11, and they are in far better financial shape then. They're not leveraged as they were then. Listen, by 2014 or 15, many of the majors were concerned we're going to be able to keep the lights on. So they are in a much better shape. Number two, they are recognizing that we are in a unique political environment where politicians who never stood next to miners and wanted to be seen with miners now openly embrace them and call for it. I'm involved in a play in British Columbia in an area that maybe 20 years ago people would say, oh, they'll never have a mine there or whatever. Now we had from the far left political arm, politically in their own house, embrace this company and tell people how important it was. So this critical mineral talk that people hear about is real. Governments, because of decades of ignoring it, and it can't happen overnight. People talking about, yeah, the United States and Canada, they can pass all the laws and put all the money aside. This isn't just something you go out, you buy it, and you start using it tomorrow. It'll take years to get to that level. And that's why the majors recognize that right now they've had cards to play unlike any other time in the 40 years I've been in this business. Well, I don't think it's going to happen in a crash form. That's why you have that. When you have suddenly people down 20, 30, 40% and the margin department's calling you, you sell whatever you can in order to meet that. And you ask questions later. I don't think it's a crash that's going to occur. And I believe it's going to be a rollover and leakage. And there are a lot of reasons, including a loss of the political strength that Trump has had, economic weakness that's going to be really seen by everybody, civil unrest. There's a whole bunch of things now. There's actually 12 points that I've shared on why that'll be. But I think that's going to be over time, Elijah. And as long as it's over time, as long as it's over time, gold won't be sold because people have to raise money. People have to raise money. And quite frankly, I want to point to what we said in the onset of this. And I may be singing to the choir. We're seeing financial service firms. Listen, 39 of the 40 years that I've been in this business, Wall Street treated gold like kryptonite. They didn't want to go near it. They didn't want to go near it because it kills their favorite stocks and bonds. And now we have major financial institutions telling their clients to make gold part of their portfolio. So I don't know how then we have huge declines when they're first coming to this. When we start going to parties, taking the Uber, and the guy that's waiting on us is telling us about some hot gold stock or why you should own gold, maybe that's going to be a time when we reach the peak, but we're so far from that I'm not concerned about it at all in the general financial media. But I think all of this, and then just the long-term story about the change in monetary, that people are recognizing that gold's money again, that central banks are getting rid of bonds, including our own, and adding gold as a monetary base. And when you start hearing, this I think was perhaps the biggest news in weeks, when Main Street brokerage firms, and forgive me whether it was JP Morgan or somebody like that, actually started talking about taking 20% away from bonds in the 60-40 plan.
In this powerful conclusion, Peter Grandich explains why today's gold market is stronger and smarter than ever before. Unlike the 2010-11 bull run, major miners are now financially stable, politically supported, and strategically positioned for long-term growth. Governments that once ignored critical minerals are now prioritizing them. But as Grandich reminds us, rebuilding supply and infrastructure takes years, not months. He also highlights how Wall Street's perception of gold has changed dramatically. Financial institutions are finally encouraging clients to hold it, and central banks are quietly increasing their reserves. These shifts signal that gold is reclaiming its role as real money and a hedge against uncertainty. If you value real market insight, like, share, and subscribe. And turn on the bell to stay ahead of the next big move in gold.